Hi everyone. We're going to do a quick market update right now. Just tell you what's going on because there's lots of things that are really driving markets and stocks have reached record highs in the US. So let's dive straight in. Let's look at the charts. Brilliant. Now, this is my usual one. I'm sure those of you who've seen this before will recognize this. It's just global stock markets, global stock indices, how they're performing today. So that's Tuesday, the 1st of July. So we've got the start of a new quarter and it's pretty a sea of red. Now, US markets haven't opened right now, so just follow my pointer. We're going to go down to Europe. We're also going to look at Asia. As you can see, a sea of red for Europe. Nothing going very far, very fast. This is the quarterly performance over here where my pointer is. Now, if you look at this column, much lower returns than if you look at the column at the very far right. And that is because these are currency adjusted returns. So that real benefit of the euro, that strength in the euro, strength in the pound, particularly versus the dollar, that's really showing through. So any gains in European stock markets in the 3 months to July, so in Q2, that was mostly driven by currency returns and not actually by what happened in stock markets. Certainly not for the main European stock markets like the Euro stocks. We saw 3% decline in the CAC there. The FTSE did okay, and then some pretty strong gains for the DAX, for the FTSE MIB, and also for the IBEX in Spain. But just look at that, massively outperformed by the US. So we're seeing a real switch, focus more on US equities and less on European equities that did really, really well. Now, I also want to draw your attention just to the Nikkei. This is because we're 9 days away now from the deadline for countries to agree reciprocal tariffs with the US. Now we know the UK has one, China's got one in place as well, but Japan doesn't, the European Union doesn't, and that's really showing through now in stock markets and how they're performing. So a bit of weakness, bit of mild risk off going on in markets on Tuesday as we head into the afternoon on Tuesday. But the Nikkei fell 1.2%, and that comes again down to tariff headlines that came out overnight with President Trump saying that he will slap more tariffs on Japan because they're not taking US rice. So expect lots of these headlines and they could become market disrupting going forward. But it's not just stock markets that are in focus, and it's not just tariffs that are in focus. The US is also trying to get a budget. Now, it's really having problems getting through the Senate right now. It's expected to add over $3 trillion to the US deficit and the US national debt over 10 years, which would push the overall deficit or overall national debt level, to $36 trillion. That is a huge amount. Now, we're not seeing that in stocks because we know US stocks have just had a fantastic quarter. We also saw record highs for US stock markets just last week. And on Monday, actually, they also, at the start of this week, they recorded record highs. So really good Q2 for US equities. Not such a good Q2 for the dollar, and not such a good start to Q3 for the dollar as well. On Tuesday, as you can see, this is the G10 currencies against the US dollar, and they're all up against the US dollar, being led by the yen and the Swiss franc. So it really shows those safe haven currencies are really starting to gain. Now, we know that fears about US debt levels, and when you're adding like over $3 trillion to the US debt through this budget, it of course is inevitable that it's going to ask questions about the sustainability of US debt. So what we're seeing is a bit of risk off. So those safe haven currencies are really getting some inflows now and some outflows out of the dollar as the focus really goes to US fiscal concerns. If I just look at, this is the S&P 500 though, we're going to switch, quickly from equity, from Forex back to equities. That looks like a really nice strong uptrend. And then what's really interesting, this is the Euro Stoxx index. That doesn't look so good at all. Euro Stoxx index hasn't managed to get back above the highs before the April 2nd tariff announcement, so it's kind of weakened from there, but it is converging around its moving averages here. This is the Euro Stoxx 50, so the main 50 companies in the US. So as you can see here, we've got some, we're here just converging around the 50-day and the 100-day moving average. So we don't really know where we are. We're in a bit of a holding pattern. So I say we're just taking a pause because we want to see how does that budget go, and also how about what's going to go on with the EU trying to get a trade deal with America. Now, Talking about trade deals, we're also talking about everything that's been going on with budgets. We've got a welfare vote in the UK today as well, which could again make it harder to bring down those deficits in the UK. This is not worrying the bond market at all. As you can see, this is 30-year bond yields, but let's go to 10, which is more of a standardized thing. The UK bond yields UK bonds are outperforming, yields are falling by the most, down 6 basis points today, 3 basis point decline in the US. Now, this may sound very counterintuitive. We've got a big budget bill trying to be passed, desperately trying to be passed in the US. We've also got this welfare vote in the UK. But I would say that the bond market, financial markets generally, haven't really been looking at the politics. Certainly the bond market today isn't looking at the politics. And that is because we had Andrew Bailey come out today and really kind of ramp up that dovish rhetoric that he spoke about at the Bank of England meeting just a couple of weeks ago. So it suggests that they're focused much more on weakness and growth than inflation. He also touted the possibility of slowing the pace of sales of gilts and slowing the reduction in the size of the UK balance sheet. Now that is huge. It doesn't mean that we're going back to quantitative easing. It just means that we're rolling back on quantitative tightening. So that is also a positive for the Treasury, for bond yields, and that's why UK yields are falling. So it really does make very likely now that August rate cut from the Bank of England. Remember, that reduces government interest bills. So that does also reduce debt levels in some way as well, an indirect way of reducing debt levels. But if interest rates fall, then that means the price of government debt also falls. So that makes it cheaper for these highly indebted governments to borrow. So that's why the bond market is very, very calm at the moment. But I also want to talk very, very quickly about Tesla. Tesla is, if I just pull up the Tesla chart, it's had a really strange ride, Tesla. It's just being jostled around by the end of the bromance between Donald Trump and Elon Musk. As you can see, it's been trading in a fairly tight range, actually, between 278 and about $100 range, 378 on the upside. It's very, very close now to some key moving averages, the 100 and the 200-day moving average. It is down about 5% in the pre-market, and that becomes on the back of Trump again trying to get at Elon Musk by threatening to remove subsidies for Tesla, government subsidies for Tesla. So that is something to watch. Also watch Apple later today as well. We'll be watching Apple over the next few weeks. It's the laggard of the Magnificent Seven. We know tech stocks are back in favor. They've really helped lead US stock markets to their record highs. But Apple really been lagging that. That's because it's not really in the AI game, not in the same way as some of its competitors. But it did say that it would use an outsourced AI model, something from Anthropic, maybe that Claude that they use to boost its Siri. Now, what does that mean? Does that mean that this is great, it's going to be, adopting AI, this could boost sales in the future? Or does it just highlight the fact that they don't have very much AI experience and they need to use people outside? So we'll be watching how Apple does and how the market reacts to the AI news. It's a key theme for markets at the moment. But overall, guys, we've got a bit of a risk-off tone to the markets. There's a lot of politics which are going on, which are really impacting markets, but we're watching Tesla, we're watching what stocks do, and of course, as always, we're watching where the dollar goes next. Right now, the dollar seems very weak at the start of another quarter. So thanks so much for joining. Speak to you next time.